If it was the only love I know.
Purchase or trying to actually buy a house to get them prepared well to make their dream come true. So biggest or number one thing that we need to do is get them a pre-approval if they don't have one, and with that pre-approval we have ammunition to go shopping, look for the house that you're dreaming for, and start putting offers.
Absolutely, Bora, and we'll touch more on pre-approval when we go through the presentation. So in the interest of time, I'd like to move to Kathy. Kathy?
Hi, this is Kathy. I'm with Chicago Title. I work closely with Melissa Palafox, who's our escrow officer, and we are the neutral third party. We handle all of the paperwork and the correspondence between the buyer's agent, the seller's agent, the buyer, and the seller. We collect the funds in escrow, make sure all the documents are signed, and then release the funds at close of escrow and transfer the title of the property from the seller over to the buyer.
Wonderful. Thank you, Kathy. Melissa?
Hi, I'm Melissa. I've been with Chicago Title, Cupertino office for almost 20 years now. I'm, like Kathy said, we're the middleman between the seller, buyer, lender. We do the escrow paperwork and process and take in all the funds and close out the transaction in a timely manner.
Wonderful. Thank you, Melissa. Carlos? We can't hear you, Carlos.
There you go. My name is Carlos Anzuris, and I've been in financial services for the last 15 years. And my specialty is asset protection. One of the main things that I do after Sharad finds you a beautiful home, and Bora does the financing, I come in at the end and protect that asset, protect the home ownership. If the individual, the borrower, will happen to get sick or pass away, their house is paid off and all their debts paid off. And so that's where I come in on that side. And another sector of it is later on, after their house is paid off and they have all these assets, making sure their legacy, we put a legacy protection plan. So there's a transition going from inheritance from one family to the other. So that's what I do.
Thank you, Carlos. Faye?
Hi, Faye is here. My name is Faye. I'm with Sharad's team. Just want to say hi to everyone and hope everyone is staying safe during this COVID-19. So me and Sharad will be helping with you guys for the entire home buying process. And today, this webinar, we hope you guys find it helpful. Feel free to raise any questions in the chat box, and I'll make sure that I read that out to Sharad and to all the officers here to get your answer, to get your question answered. Okay.
Thank you, Faye. And I'm Sharad. I work for Keller Williams. I help my clients to get into their new homes, or if they are looking to trade up their existing homes, move into bigger homes. So I sort of handhold them and help them out through that process. So having said that, give me a moment and I am going to start. Can you guys see my screen?
Yes.
Do you see the flow chart which I have?
No, not yet.
No, we just see you.
Okay. Give me a second. Technology will not always never work at the last moment. Guys, anybody on the call, anybody audience on the call, Nitin, Mahendra, anybody else have any questions before we start?
Thank you, Kathy and Melissa, by the way, for joining us today. Appreciate you guys coming on the call with us.
You're welcome.
Our pleasure.
I really appreciate that. Thank you.
Pawan, Rajan, any questions you have before we get into the call? All right, I guess not. So what I decided was, instead of just going through the deep down into the escrow process, what I thought was maybe to give a brief context into where escrow fits into the picture, we'll probably take a high-level overview at the entire home buying process from point A to point Z, what all steps are involved. And then as and when we reach to the point, I'll bring in our escrow officers and I'll bring in Bora and a couple of other people to sort of take a deep dive on those steps and on those topics. So I hope this will be okay.
Perfect. Perfect.
So,
Sounds good.
Wonderful, wonderful. So if you look at this flow chart, and I'm hoping everybody can see my screen now with the flow chart on there.
No,
No?
no.
Really? Okay. Give me a second. Can you
Yes.
see now?
Yes.
Okay, wonderful. Sorry about that. So basically the entire home buying process, what I have done on this chart is I have divided that into 3 different phases. And the reason I did that is that couple of phases, we need active help from the buyer where the buyer is actively involved. The buyer is actively involved in almost all of the phases, but the 3 phases means where the buyer is right in the forefront, actively working in finding a home. Then the phase 2 is more about the back end work, which goes behind the scenes. Most of the times for buyers and even people for first time home buyers, especially even buyers who have purchased many homes in the past, this phase 2 sort of looks like a black box to them. So that's where I wanted to spend more time in dissecting that black box and see if Kathy, Melissa, and all of us, we can help out, sort of open up that black box and go over those small boxes and small steps one at a time. And then the third phase is when we hand over the keys to you. And then at the last, we'll talk about that now you have built your asset, then how we can protect those assets for you. Sounds good?
Very good.
That's good.
Yes.
Wonderful. Wonderful. So in phase 1, what we do is we start with initial consultation. It's more about meet and greet with the buyers. Outside of that, it's really about finding the wants and needs of the buyers. Now, US being so, the inventory is so short, practically every state across United States, it's really a matter of really clearly defining what your needs are versus what your wants are, and clearly defining them, putting them on a piece of paper, so that when we start looking at the homes, we know exactly what we are looking for, and we are not leaving great homes on the market because we are confused between versus what we need versus what we want. For example, one of our need can be, hey, I have 2 kids and I absolutely need 3 bedrooms. I cannot live in my home if it doesn't have 3 bedrooms. I will classify that as a need. Versus I have 2 cars, but I need 3 cars just in case a guest shows up sometimes. So I need to have another 3rd car garage, right? That's what I'll classify as a want versus as a need. So at a high level, that's how I define the wants and needs. So I like my clients to be absolutely very clear as to what their needs are versus what their wants are. We put them on a piece of paper. And from that point onwards, that piece of paper, which actually helps us define the price point, what we are going to be looking at when we are going to be looking at any piece of real estate, what areas we are going to be looking at, and that practically defines this entire process from that point onwards. At the same time, during the initial consultation, we always talk about pre-approval, and Bora touched a little bit on the pre-approval, and I'm going to come to you, Bora, in a moment. But that part, we always make sure that just like, for example, you guys will never visit Safeway to buy a carton of milk without having some money in your pocket, right? You guys probably will never do that. And the same things, lots of times buyers don't understand that before we really enter into the market, we really need to have some sort of financial arrangement with us so that when we like a home, we are in a position to immediately write an offer on that home and purchase that home. One simple way to understand pre-approval is just like you guys, we all apply for credit cards, right? It's just a piece of paper, plastic. But the credit card company, they have given you a certain limit that, hey, on this credit card, you can use up to this much amount of money. Similar thing you can think of as far as pre-approval is concerned. It's a paper on which bank have given you a limit as to how much from that piece of paper you can spend towards your home purchase. That's how I sort of, at a high level, try to define what pre-approval is. And Bora, going back to you, how do you, what in your day-to-day work, right? How do you see the pre-approval being of utmost importance to the buyers? And if you can share a couple of stories, what you have seen in your day-to-day practice where buyers have really been on certain homes because they have really pre-approvals with them, and how they might have lost on a couple of homes because because the buyers were a little bit lenient onto getting that pre-approval process in place, and sort of if you can lay down the importance of having pre-approval for our audience, Bora.
Right. So with the pre-approval, which is one of the biggest obstacle that people have to face, is to get that pre-approval, like you mentioned, in hand to be able to go shopping for the home. So pre-approval, a lot of lenders, there's a distinction between a pre-approval or a pre-qualification. Pre-approval is more solid, more safe, just because we go through a full underwritten process where the underwriter reviews the whole file and pre-approves you for that certain loan amount that we are asking for. So normally speaking, when I ask for a pre-approval, I go based on the documentation that I receive from the potential buyer to get the maximum we can for the pre-approval as far as the loan amount goes. And then with that pre-approval in hand, that borrower can go now shopping for their dream house. And if they find something lower than the pre-approval is, good for them. They can also use that. You can't just go above that pre-approval loan amount normally, unless we go through some exceptions. But normally speaking, the whole pre-approval process, upfront, pre-approval, fully underwritten, you have the ammunition, you can go for shopping. So in the recent days now, I mean, I'm working in one case where the pre-approval is the majority point of this pre-approval is to provide all your documentation. We have to run credit, we have to get your income documentation to have that full package ready. Now, once you get that pre-approval, you're ready to go shopping. So that's the biggest obstacle. And definitely with my process that we have in place, or we have with our company, is that I can get that also in 1, 2, or 3 days maximum, that we can get that pre-approval fully underwritten. That will give them the capability to go shopping, basically.
Wonderful. Thank you, Bora. And guys, I like to keep this meeting very interactive. So audience, you can anytime jump in if you have any questions, and we'll try our best to help answer those questions. Any questions up till now? All right, wonderful. So once now we have figured out what we want, what we need in the home, we have figured out the money, now we have money in our pocket. So what do we do next? We go out and shop for the home, right? So just like I said, based on the want and need checklist, we have figured out what areas we are going to look at the home. We have figured out our money, we look at the home. We go around, generally it takes, on an average across the United States, the average home buyer looks at the home is approximately about 8 to 9 homes before they make a decision to purchase a home. That's a high level average. So we try to get into that home. So what we also do is we look at almost all the disclosures of the homes upfront, because there is no point in looking at a home where there are certain red flags. For example, there is problem with foundation, or there is problem with roof, or there is plumbing issues and things like that. We narrow down and remove and eliminate all those homes from our list. And we only go and look at the homes which really make sense for us to look at. And once we have narrowed down that home, all the members of the home like that home, including kids, wife, and whoever the stakeholders are on that home, everybody says, yes, absolutely, this is the home we want to get into. At that time, we get into a process of writing an offer for that home. Basically, at a high level, offer is nothing but a buyer's intention to purchase that home, in which buyer intends that how much money he wants to pay for that home, and how quickly he'll be able to turn around that money and give that money to the sellers. That's also what in home buying terminology we also call as length of escrow, that how long the escrow is going to be, and that's where most of the paperwork is done. And we'll talk about escrow just in a moment, but that's what basically a couple of the points in the offer are: how much money we are going to put down, are there any contingencies, for example, if the buyer wants to do another property inspection or any sort of inspections, what time frame these contingencies are, and how quickly we are going to turn around and give the money to the sellers. Those are the basically 3 major components of the offer. Once that offer is written, the sellers looks at the offer. Now the seller might have multiple offers or just one offer to look at. They look at those offers, and based on the seller's need at that point in time, they choose an offer which they will accept, which means at that point in time, the buyer and the seller, they both are in contract. And from that point onwards, my job as real estate agent is to protect your deposit money, which you have put up from that into the offer, and make sure that we what basically we look at whatever we have written in the offer and we comply with whatever the terms and the conditions of the offers are. And once we do that, then our file basically goes to Kathy and Melissa. They both are in escrow, and Kathy or Melissa, whoever wants to start, I'll probably like you guys to give a brief overview of the escrow process. Like I said, it's sort of a black box for most of the buyers, if you know what I mean. So you can really very helpful, simple terms, if you can sort of lay down the sketch of what escrow process is and what things are involved, and we'll take it from there.
Of course. So once we get the contract, we open up the escrow with the terms that are laid, like Sharad said, within the contract, and the targeted sales price, earnest money deposit, loan amount. We like to gather all the information at that point regarding the loan agent and all the parties that are involved in the transaction. We also request from the listing agent and the buyer's agent the seller and buyer's email address and cell phone numbers so we can send out some opening packages to them. The opening packages does request from your clients some personal information, and if they decide to live in the property, who their loan agent is, who their insurance company will be, the main parties that help us facilitate a smooth transaction for the clients. Once that takes place, we do send out wire instructions to the buyer to get the earnest money deposit in if they choose to wire in the funds. Once the deposit comes in, then we go ahead and send that deposit receipt out to all acting parties, listing agent, selling agent, mortgage broker, lender. From that point, then we wait to collaborate with the lender if there's a lender involved and start that process for their CD disclosure to the new buyer. Meanwhile, the seller, one of the opening packages is to get their payoff information if applicable, and we start that process with the sellers as well.
Okay, so Melissa, you touched a little bit on escrow money deposit, right? So if you can help us, our audience, understand a little bit more about escrow money deposit, and does it directly go to the sellers or does it come to you? And how do you guys protect the money deposit?
So the escrow money deposit does sit in escrow until we close the transaction. That is part of the seller's proceeds. So it just sits in our account. There has been transactions where buyers have requested that, or the sellers have requested that the deposit be provided prior to closing. However, that does require written instructions from all parties to release the deposit prior to closing the transaction. But until we close, the escrow sits in our account. And then once the lender's funds come in and buyer's funds to close, upon recording the transaction, then we exchange the proceeds and pay off any demands that were in our file at that point.
Okay, so what the way I'm hearing is that the sellers never touch the money from the buyers. The agents don't touch the money. It basically comes to you as a neutral third party, and that's where the money sits in. Is that correct?
That's correct. That's what the escrow is designed to do, is to protect the funds between all mutual. We are the mutual party, so we sit in the middle of the seller, buyer, lender in this transaction.
And I do want to add real quick that we do provide title insurance, and that title insurance does ensure that when the buyer receives the property at close of escrow, that it is going to be free of any encumbrances from the previous owner. So we ensure that, you know, that the buyer's protected, the seller's protected, and that insurance policy stays in place for the entire time that that buyer owns that home. So it's a great form of insurance. It's a one-time thing that is part of the transaction, but it does stay with the property for as long as you own with the property, and it covers against all kinds of things. So if there was an issue with the seller prior to and something came back, maybe there was an unrecorded document or some forgery or something from a previous seller, that title insurance is going to protect you as the buyer. So you would come back to the title company, we would look into that for you, and that would be something that would be investigated and taken care of. So it's not out of pocket for you as a buyer. Very important to have.
Absolutely, Kathy, and thank you so much for that. And Kathy, can you give us a few examples of when you talk about encumbrances, like just 3 or 4 examples which you might
Sure.
have seen coming back to you time and
Sure.
again?
We've had situations where the property has been sold and there was an heir possibly to the property that did not know about the property being sold and came back and has filed a claim that they were entitled to a portion of those proceeds and came back to the buyer. And so that's something that the buyer would reach out to us. We would have to go investigate that, but the buyer's protected from that because we have title insurance in place and we would handle that with the seller. And sometimes those, we would pay the claim out and then worry about trying to, recover that money if possible down the road. There's all kinds of issues where sometimes there's people build things on the property that maybe covers a lot line and you'll never know until maybe your neighbor moves and a new neighbor moves into that property and then they do some inspections and determine that something was built, the shed or something was built on their property line. Those are things that you're going to come back to the title insurance company for, and we're going to look into those for you and make sure. Sometimes there's right-of-way issues on access to property, driveways. There's all kinds of things that can come up. Fraud is a huge one too, that we do protect against fraud and forgery, which is a good one.
Absolutely, absolutely. And Kathy, I hear many times that there is a specific terminology. Many of my buyers ask me that, hey, what is cloud on the title? Can you shed some light on that, what that means, and how you guys protect the buyers from that, and how, basically, just in very simple terms for our audience?
Sure. What a cloud on the title can be an old loan from a previous seller that maybe was not removed from the property at the time, or maybe it was something that popped up later on. Those things, we ensure that anything from the previous seller, we do research, we pull a preliminary title report when escrow was initially opened, and we make sure that when that property is transferred, there are no clouds left on that title. Everything is going to be resolved. If there is a old loan from a lender and it was maybe the seller had refinanced and it wasn't showed proof that it had been paid off, we will go in and try to track down that reconveyance and get that removed from the property. And we have to do that prior to closing escrow, so there's no issue when the buyer takes that property, because we're ensuring that the title is free and clear for that client, for that new buyer. That's the purpose of title insurance.
Okay, wonderful. And what happens, Kathy and Melissa, let us say a seller had, for example, he was not able to pay his taxes and then the IRS comes back and puts a lien on his property. Do you guys sort of also look at those things which might not readily show up from the bank accounts? For example, the HELOC on the lien or any other loan on the lien. How does all of those back-end things work?
Melissa, you want to answer that one?
Yeah, so property taxes and any type of home equity line of credit, those will all populate onto our preliminary title report. Those are required items that we are to pay and clear before we can close. So we work with the seller to request demands, documents, anything that may pertain to them, such as a judgment. If a seller has a judgment against them, we also have to work on clearing those before we can close escrow.
All right, wonderful, great. And what is the interaction of the escrow team or you guys with the, for example, the loan officer or to Bora's team, and how do you guys work with each other back and forth before you get the money? If you can give like a high level overview of that process.
So we work with them either via phone conversations. A lot of times I deal through email conversations. We always like to make sure that we have direct contact with the seller and the buyer. However, the lender and the loan agent and realtors a lot of times are just via email.
All right, great. And Bora, in your experience, what some of the issues which you think buyers should be really aware of before they start their home search so that we don't run into any issues during the escrow process? Can you shed some light on a couple of things which buyers should always be aware of, so basically the transaction doesn't fall through during the escrow process?
To make it more smooth is one of them you guys touched already. Tax is one of the biggest that property taxes are always due. If they haven't done so, they need to do it at least before, at the time of closing. So that's one of the biggest. If you can clear that before closing, great. If not, it has to be taken care of at the time of closing, and it's good to have the borrower be aware of that. The other thing is obviously anytime they're going to a purchase or refi, in this case purchase, we want to make sure they don't obtain any new any credits, anything unusual, basically, to make the transaction smoother. I think that's probably the biggest part of this whole process, especially with the escrow, is having the property free and clear of the items that we need to have it ready.
And I'd want to add on the buyer side too. We've seen, you know, with the stock market had been quite volatile recently with all this COVID stuff going on. And we've had some clients that went into transaction and had not cashed out their down payment, cashed out their stock for their down payment. And then, you know, the stock market hit and there was some issues with that. So it's always good to take care of that as you're, you know, writing your contract, getting all your ducks in a row, as they would say, to make sure that you have your down payment and everything ready to go. So you're not going to have an issue down the road trying to access your funds. That's always important.
Right, good point.
Absolutely, absolutely. And a couple of, yeah, sorry, go ahead.
If I can chime in on that too.
Yeah, sure.
Kathy, so one of the things that I've seen people trying to get money from their 401k or their IRAs is they're trying to pull money into, they're leaving the money in their stock market. And just like you mentioned, Kathy, you're right, the market dropped substantially, like 20-25% in the last, it's starting to stabilize now, but it did drop substantially the last 2 months. And so one of the things that we say is, one of the things you can do is, because they're trying to wait for the property to close before they go actually request the money to get out. So one of the things that you can do is, if you know that your down payment is, you know, 50,000 or 100,000 or whatever it may be, you can transfer those funds into a cash balance account. So that's just one of the ways, Kathy, that they can prepare ahead of time by not cashing out on the money yet, because they want to make sure that that property is going to go through first. But right, they can actually move their money from the stock market into a cash balance account where that money is just ready to go. So when they're about to close escrow, they can request the wire to escrow or get a check mailed or overnighted to themselves. So that's just one of the strategies that you can do on this side where I'm at, because I'm seeing how people are pulling money out for down payments from the retirement accounts. One of the things they can do is just transfer that into cash, so that money's set aside, because the people that left it in the stock market, unfortunately, their balances went a lot lower. And so that's just one of the ways to prevent that moving forward.
Right.
If you are going to buy a house and if you do have these type of accounts, you're able to move those accounts into a cash balance, which is just liquid, and it's just sitting there. I just wanted to chime in on that.
Perfect.
Absolutely, Carlos. Thank you so much. And I'll take a break. I'll take a roll call if anybody on the audience have any question at this time before I move on.
Carlos, I have a question.
Sure.
Since you mentioned that we can move the funds into the cash account, how long does this process normally take if a borrower requests that?
Usually for example, today let's say we called one of their retirement companies and we ask them to move X amount of money into a cash balance. It usually happens it happens at the close of the market day. So within 24 hours, that market should be transferred over to their cash balance account. And once that money's there, it usually takes, if you already know who the title company is going to be made out to, if it's going to be made out to you, that usually happens within 2 to 3 days before that money gets even overnighted. And if it's wire, happens a lot faster.
Perfect. Thank you.
So, Bora, on this one, I generally hear that some part of the money they have to be put into the buyer's account for 2 months, need to be seasoned. Is that still true, or can the buyers just take their money and directly deposit to escrow? What do you think from the lender side? How does it work?
Right, that's a good point. So normally speaking, if someone has those funds in their bank account, let's say a checking or savings account, that money has to be seasoned for 60 days, meaning that deposit has to be there for the last 60 days. So if for some reason within that 60-day you see a large deposit, I would say more than $5,000-$10,000, that raises a red flag for the bank, saying, "Hey, where did this money suddenly come from?" So then we have to dive in deeper and get into the other account where those funds are actually coming into this checking or savings. So we have to track it down. So one way is either have those funds ready and sitting there seasoned for 60 days, or they can directly transfer those funds via, that's probably the best way and fastest way, is to wire those funds from wherever it's coming from. That way we can avoid to show, the track of the funds, where it's coming from. So that's one way we can avoid basically showing the seasoning of the funds. So either have it for 60 days or transfer it directly from a certain account like Carlos mentioned. That way we don't have to track it down.
Okay, so it can directly go to the title company or the escrow account.
Exactly, right. So we have to be transparent and give them all the options, and the easiest way is always directly if it's possible, and wire transfer would be the preferred method.
Sure. And Kathy and Melissa, do you guys want to touch a little bit on all the frauds which are happening around wire transfer nowadays, and what will be your suggestion to the buyers around when they do the wire, what things they should consider about, since Bora just touched on wire transfer?
We always recommend that they call and verify all wire instructions before sending their funds. Our process is secured. It goes out with an email, and then an access code is sent to their cell phone number for a second level of security measures. But yes, always recommend your clients to contact the title company to verify the instructions before sending.
Right. Okay, great. And any other things which you guys wanted to touch on? Kathy, Melissa, Bora, Carlos?
Yes, I got a question for Kathy. It's obviously title insurance, so the whole process is insured, which is peace of mind to the seller and to the buyers that the whole process is being insured. And obviously there's usually who pays for the escrow and title fees? Is that what's customary that you guys seen?
So in Santa Clara County, it's customary that the seller pays the title and the escrow fees. All of the surrounding Bay Area counties, San Francisco, Contra Costa, Alameda, San Mateo, those are all buyer pay. So the buyer pays the title and escrow on those transactions. That's customary. Obviously, it can be written in the contract, however you choose to write it in the contract. But usually in Santa Clara County, the seller is going to pay the title and escrow fee, and they pay that for the buyer.
Nice. So they, out of their proceeds when they sell their property,
Yes.
those fees come out of the proceeds of their sale of their.
Yes.
Got it. And then Bora, the buyer's escrow fees and title fees that on their end, is that part of the loan process too, of the closing costs?
Right, correct. So the lender fee for the buyer part, obviously the seller opens the escrow like you guys mentioned. The buyer pays a certain small fraction of a fee to do the business with us, which is normally right below $1,000, somewhere in that area. And the other fees are obviously set by the seller's escrow company.
So, Bora, just like the buyers need to have title insurance, do lenders from your side also, do you also ask for any sort of insurances for the title?
No, we don't. So that's all set by the seller's escrow.
So in escrow, there is for the loan, there will be, and that will be part of the title and escrow, the buyer will pay a lender policy that insures the lender, and that just ensures that the lender is in first position on the property and it secures their loan. So that is part, and if you were to refinance your property, then your lender would require a policy again to ensure that. And it's based on the loan amount.
Sure, and that is separate from the title
Yes.
policy, correct?
Yes. So your homeowner's policy is a one-time thing, and it's paid at the time of purchase, and that stays with the property for the entire time you own it. Your lender policy is, and it's a smaller policy, it's just for the loan, and it insures the lender. That is done once, or if you do refinance, your new lender will request a policy as well, and that's included in your loan charges.
Sure, sure. And that is generally paid by buyers.
Buyers, yes.
Okay, okay, all right, wonderful. So now we have gone through this, and money is in with you guys in the title. Then how does the signing process works, Kathy and Melissa? Like, when do buyers sign, when do sellers sign, what they are signing, and is there a specific order which they should sign? How far earlier in the process they should sign? If you can shed some light on that.
So as far as a seller signing goes, the seller can sign off prior to the buyer's loan docs coming in. Seller's CD has to be disclosed to them before the buyer actually signs. So with that being said, the seller, if they are happening to be moving out of the property and relocating to another area, we'd like to get them into our office or signed off with a mobile notary prior to leaving, just to make sure that we're not pressed for time in their situation. As far as the buyer's concerned, we have to wait for the loan docs to come in from the lender in order to facilitate their signing. Sometimes lenders' loan documents are date sensitive and have to be signed on certain dates.
Sure. And let us say on a purchase contract, there are husband and wife, and do both of them have to be present at the signing? What if somebody is traveling during that time? How does that process work?
So it's always a possibility that one of the sellers or buyer is traveling and is unable to be present for a sign-off. We can always present the possibility of them executing a power of an attorney to be appointed to somebody who is in the area to do the signing for them. That can be done by a seller or a buyer. In that case, if there is a buyer and there's a lender involved, the lender does have to approve that power of attorney to be executed to facilitate their loan documents. Other than that, we can always do remote signings. If they're in the United States, we can have a mobile notary meet with them wherever they're located. Sometimes your buyers are purchasing properties that aren't here in California, but they have seen the property. We can always do that for convenience as well.
All right, wonderful. And that power of attorney needs to be created from the embassy of US if they are traveling outside the country?
We create the power of attorney. If your clients are located out of the country, they do have to go to the US Embassy or consulate to get that executed and notarized to be recorded here in California.
All right, all right. So once the power of attorney, they get it created from embassy, we notarize it here, then the buyer or the seller here, they can sign on behalf of the other buyer.
Correct.
Okay, wonderful, great. Guys, any other questions anybody have on the call?
One question is, what's the difference between title company and escrow company?
Oh,
so here in the Bay Area, we are title and escrow. When you work with properties down in Southern California and other areas of the country, they do title and escrow separately.
So what are the differences in terms of their functions?
Well, escrow processes most of the paperwork, while title does the search and recording of the documents. Together here at Chicago Title, we work in conjunction with one another in coordinating that smooth process.
I see.
Anything else? Going once,
Yeah,
going
I got
twice.
a little bit. Yeah, just to clarify, what was said right now. Basically, the title company, I want to know if I heard this right. So the title company does the search on the title to make sure it's clean. There's no encumbrances. It's nothing crazy on there. And then there's an insurance. So the title company basically does the insurance on the actual title.
Right.
And then the escrow is just the process of the paperwork to get everything structure and
To
you know
break
all
it-
line.
Right.
Correct. So to break it down, that is the terminology of a title department versus the escrow side of things. Chicago Title, we issue the title insurance and do the title search within our company at our title department division.
And then we're the escrow branch, and we handle the escrow, and we work in conjunction with the title department to search the property and provide the title insurance, and then we handle all the paperwork. So it's all a one-stop.
No.
In Southern California, you're gonna have you'll be dealing with two different entities if you're
Right.
handling it there. So we do handle properties here for Southern California, and it's so much easier.
I got a question for you, Kathy.
Sure.
So, escrow, the sellers, you know, the listing agent is representing the seller, the buyer's agent is representing the buyer, the lender is representing the borrower. Where does escrow come in representation on all this?
We're
Who do
the
you guys
neutral-
represent through this process?
We represent everybody. We're the neutral third party in the middle. We only take instructions from the buyers and the sellers, or each party. If they don't agree, we cannot close escrow. So we are neutral. We're Switzerland. We're right in the middle, just the neutral third party. We work for everybody.
Thank you.
So they take instructions from buyers and sellers, but those instructions have to be mutually agreed upon by both buyers and sellers before the escrow company will execute them.
Absolutely.
So I heard that during escrow process, it's advised that you do not open any credit cards and things like that. Is that right? Or if that's yes, what else should we be trying to avoid during the escrow process?
That's a great question. That's a lender question right
Right.
there.
So one thing someone shouldn't do, or borrower or buyer shouldn't do, is do a credit check before closing, or obtain new credit, or make payments to the existing loans, because all these can delay the whole process, because we have to prepare the final documents accordingly. So if someone goes and inquires a credit, that credit won't show up necessarily right away. Most people think everything is in real time. The problem is nothing is real time almost. So that's when the problem arises. If borrowers start applying for credit or paying down towards their credit, and thinking that, hey, now my balance is different than it was 2 days ago or a day ago, so which doesn't reflect right away. So that therefore it's we're suggesting not to do any obtain any new credit or make payments on existing credits, to avoid all of this and make it to a smoother transaction. And at the end of the day, this is one of the biggest questions always. Why do I have to pay now this much, and later on I probably have to pay a little more than what I owe? But that will be always settled afterwards. Whatever is paid over will be refunded. So that's one thing that needs to be clear, that anything that's overpaid will be refunded. However, this is just to make sure we don't even get into that. We prepare and don't do a credit run or a credit check or apply for credit, and don't make any extra payments towards any existing credit before closing.
Wonderful. Thanks, Bora. So now everything is happy. We have money in place. Nothing have changed. Escrow have closed. Sorry, not escrow have closed. We have the sign off, and we had the loan has been funded. So Melissa and Kathy, can you tell us a little bit about what is this transfer title and record of title? What does that mean? What is that entire process? And what that means to both buyers and sellers?
So once we have all the funds from the buyer, the lender in place, all the demands from the seller side, we are ready to record the documents. The grant deed is what's going to transfer title from the seller to the buyer. If there was a lender involved, the deed of trust gets recorded at that time as well. So that all goes down to the county the morning that we decide to close. Once we get confirmation from the county recorder's office that those documents have been recorded, then we go ahead and close out the escrow transaction and pay off any demands, commissions, proceeds at that time. Any overages for your buyers, such as Bora was saying, are refunded to the buyers at that time.
All right. And once that all is done, what sort of paperwork do buyers get for their records?
So they get a copy of their final statement. After their sign off, they get a copy of all their signed documents if they elected to have a soft copy emailed to them, as well as the seller. They get the same thing. They get a final statement and a copy of all their signed documents. Once the grant deed records, the county processes that, and they typically get the original deed showing that they're the new owners, typically 6 to 8 weeks after we close. That process is getting shorter now that we have e-recordings, but again, it just gets mailed to the address that they provide us to at the signing.
All right, wonderful, great. Any questions? Anybody?
What determines the end of the escrow process? What's the tipping point?
The end of the escrow process is our closing date. So whatever is specified in the contract, a 35-day closing, etc., 31 days, we use that as the targeted closing date. We try and facilitate with the lender and the buyer and the seller that everything is in place, typically the day or two before that closing date, so we can make sure that we close and record and disperse on time.
I see. So after the buyer signs off, how long does it take to get all the document to you guys and finish all the paperwork?
So in a normal environment, not with COVID, the buyer could sign in our office and on a rush scenario could sign and we could fund their loan the same day and close the same afternoon. That's a typical of the day back in January. However, now the case is the buyer has to sign off, the docs have to be returned to our office, and then we have to request the funding from the lender. That typically is a 1 to 2 day process, depending on the location of the buyer and what the lender requires if they need their original loan docs back before funding.
I see, thanks.
You're welcome.
All right, wonderful, great. And I think you touched upon a little bit on the current situation around COVID-19, and it's a good segue into Carlos. Carlos, now we have home. We borrowed money from the lender. Bora gave us money, Kathy and Melissa helped us out, work all the paperwork. We recorded the home. The home is in new buyer's name, right? And we always know that something like COVID-19 happens or some other natural disaster is happening, or if buyers lose their job or if they get sick. How do you suggest buyers protect their assets from this point onward? What will be some of your thoughts on that, Carlos?
There's different types of policies that people can purchase. And one of them is like an income replacement plan, for example. Let's say the husband and wife both purchase a home. The husband suddenly gets diagnosed with cancer or has a stroke or something major happens to him health-wise where that income's no longer coming in, and or it decreases drastically. We can put a policy in place where that income can be, for example, if they need to have $10,000 to be replaced, if the husband's making $10,000 a month, and then that $10,000 is no longer coming in, the policy will kick in and will replace that income to a certain coverage amount, depending on the loan amount that they got or the purchase price that they got on the home. And so now that check starts coming in, and it's money that you don't have to repay back. So it's just an income replacement plan. There's different types of policies out there. That's the main one that's that one's the cutting edge one that's out right now. It's a hot plan that's out now, especially now with COVID-19, people getting sick and getting COVID-19 and they're not able to go to work. So if somebody got COVID-19 and it's no longer working, a plan like that would kick in and actually replace the income so they can continue to pay their mortgage, pay their electricity, pay their expenses, and then they're able to protect that asset that you, Sharad, helped them out with, and Bora, the finance, everything you guys did, the escrow, the title, all that work got put into a project, to a transaction, and then it's gone tomorrow. They happen to get sick, or even worse, they happen to pass away. That's where I come in and put a plan together specifically tailored for their needs to make sure that they protect their American dream. And so that's where I come in.
Great, Carlos. And are there any time limits or in place, like before the buyer can protect their assets, like pull up some of these insurance policies, or how does that all work? Does it have to be done immediately after they own the home, or it can be done at any time?
Yeah, usually I work really close with the real estate agent. In this case, it will be you, the realtor, and then the finance, which would be Bora. And I kind of get a preliminary information with the loan amount, what they're looking at, so I can start looking for the right policy for them. So right before they close escrow, I can sit down with them or show them virtually nowadays what their plan will look like and what's going to meet their goals and what's going to meet their financial goals. So it's the same thing. It's during the process. I noticed that after the process, it doesn't work very well because their motives have changed. Because once they have the house, they got to paint it. They got to do this, they got to move. So they're no longer focused on putting in an income replacement plan. They think it's something they can do later. And then unfortunately later never comes. So one of the advices that I do is right when the whole process is going, the recommendation process is going, the plan needs to be recommended by the professional at that time, usually from the real estate agent or from the loan officer, that this plan even exists. Most people don't even know that this plan even exists out there. They understand there's title insurance. They know that there's lender's insurance. They understand there's homeowner's insurance, but they don't know that there's an income replacement plan, which is a form of an insurance policy that protects them if they happen to get sick or pass away tomorrow. So to answer your question, it's a recommendation that needs to be thrown out there during the recommendation phases of the whole transaction.
All right. And does that income replacement plan, it replaces the entire income of the buyers, replaces a portion of the income? How does all that work?
Whatever coverage amount they want. If they wanted to replace 100% of their income, that's possible. They can. Some people maybe have different streams of revenue. Maybe they want to replace one stream of revenue. So it's just up to them what they want to do. But yes, we can replace 100% of their actual income.
All right, wonderful, great. On the call, we are almost running on top of the hour. So if there are any questions, let's take them. Pawan, any questions?
Hey, just wanted to ask one thing. So regarding the question, the credit cards question someone asked, right? So I have a additional question on that. So what if one of my accounts include like other loan amounts, like car loan amounts or something, and they are going to be done and going to be closed soon? Will that impact anything?
So as far as getting you during the whole process, you're trying to pay it off. Is that your question?
Yeah, like I'm trying to get a loan approval, and then I'm trying to initiate this buying process. But while this process is going on, my car loan, let us say, is going to be end soon, like probably in a couple of months or in a month. So will that impact anything? That might end up in closing the whole account, right? So
no, actually. So as far as debts, if it's a car, so there's a difference between a car loan and a car lease. This is a car loan, right? Just to make sure.
Yeah, right.
Okay, so if it's a car loan, and if it's less than 9 months of payments left, then we don't even hit that as a debt. So we take that payment out of the DTI equation, out of the debt to income equation. So we don't hit you for that loan. Let's say you have a $500 monthly car loan payment, and if there is 9 months or less left, then we don't even consider that as a debt. So which is good news. If it's not, let's just say you would have had maybe 12 months left on your payment. Again, the payment is $500. So we would use that $500 and hit you on as far as debt goes in your debt to income calculation. So now, if you were gonna bring it down to, to the amount that makes up to the 9 months payment, or if you pay it off before we close, then you would have to either show a proof that you paid it off, or the other thing that could also happen is at close of escrow, we would include that, and the escrow or the title company will take care of it, and will have to pay your lender directly for that. Let's say you owe $10,000, you have 12 months left, and you didn't make the payment. But in order to make this deal work, we have to take that out of your equation. Now we could do it also at closing, and take that money and pay your lender directly, if that makes sense.
Yeah. Thank you.
You're welcome.
All right, thanks, Pawan. Any other questions on the call before we wrap it up and land our plane and San Francisco airport today? 2 o'clock. All right, thank you so much, guys, for your time, for your call. Thank you, Kathy. Thank you, Melissa. Thank you, Carlos. Thank you, Gupta. I hope the session was useful, and we'll continue next time.
Thank you, Sharad.
Thank you.
Bye-bye.
Bye now. See you next time.